Hi, so this video is something where you're going to see the whole big picture of trading into one concrete plan, right? This is where we will use multiple time frames from the monthly, the weekly, the daily, the 4-hourly, the 1 hour, the 30 minutes, the 15 minutes, the 5 minutes, and the 1 minute, where you combine all these multiple time frames, all this chart into one big solid picture. When you are able to combine all these, you will clearly see a chart in a different eyes, and that will not only increase your profitability, you will have a better execution. You know when to get out of the trade, you know what is blocking you, you know where to put your stop loss, and etc. Reading the chart in such a manner rather than just one time frame alone is so important that most traders don't do that. So in this video is something that you want to watch, and I'm going to switch over to MT4 chart. So let's roll. Now that we are on our MT4 screen, I'm going to show you in this video how are we going to use multiple time frames to correlate the whole chart together in one big picture. You see, multiple time frames is something that is not often used by most traders, but it is something that is so crucial that every trader should need and should use in their charts for chart reading, even for executional purposes, for entering the trade or for exiting the trade. So this video, I'm going to touch on this pair, crude oil, right? Crude oil is, well, it's a vehicle on the MT4 chart. Again, it's something that I don't limit myself to. I'm a Forex trader. I claim to be a Forex trader, but I don't just trade Forex. Forex is the primary vehicle that I trade. But it doesn't really matter. I trade the cryptocurrency, I trade the stock index, I trade oil, commodities, and even stocks as well. As long as it's a technical chart, one that gives me a higher probability, one that gives me and I can find the edge in trading it, I will trade it, right? So in this example, this is crude oil. So right now, in the previous videos, I've talked about the one chart dissection video where I use complete price action without any indicators, and then in that follow-up video, I added indicators to the same chart to see how could we use this as an extra, like an ammunition to increase our probability of winning. So if you haven't watched those two videos, watch that. Those two videos will help you in enhancing your chart reading, which is the most ultimate key in all charts, isn't it? We got to first learn how to read the chart, then we apply the right trading strategy to that chart. Okay, so in this chart, crude oil, I'm going to show you how multiple time frames correlate to each other. So what we can see is in the latest chart, I got my Bollinger Band here, right? I got my Bollinger Band. This is the monthly chart, right? What we can see over here is this is the middle line of the Bollinger Band, and price is getting rejected here. But had I not look at the monthly time frame and I look at the weekly time frame, or I look at the daily time frame, and if I enter on a daily time frame, I would be wondering, where should I place my profit target? Should I place it at the previous high? Or let's say when it passed the previous highs, where will it go? Should I place it maybe 500 pips away or etc.? How exactly should I know where should I put my next profit target? Or where should I aim for price to go? Or where can it potentially go? See, there is little thing blocking on top. In fact, there's nothing blocking at the top. And if we look at the weekly, there is nothing blocking at the top. And this goes back all the way to the last time it reaches this height. It was in 2014. It was in 2014 where what we can see over here, there was a little bit of rejection, not heavy, but little bit, right? Little bit over here, where we can see all these up and down lines kind of confluence. Let me zoom this so that you can see this. And if I plot this clearer in the where is it? Here. You should be able, let me just draw this line over here. We should be able to see this clearly in the lower time frame. There we go. Slightly more, right? Slightly more here. So we can kind of see there is lows here, lows, and highs. So there is a little bit of rejection over here. Even more, in fact, it's quite a strong one. You see, lows, break. And then it went back up to test the high, couldn't test, and then it broke down. So it's kind of strong over here. And then when we go back here, that's where the line is. So there is a next rejection above here. Excuse me. But why did it stop right here? The monthly Bollinger Band. Why did it stop here? Now we know why. Now we know why. Why was there a rejection over here? You see this spot right smack over at this area? It is the monthly Bollinger Band. So the reason why in the lower time frame in 2014, why in the lower time frame, why price stopped here was because of the monthly Bollinger Band. That's the reason why it kind of caused the this thing to happen, because here was the monthly Bollinger Band. Now you are starting to see how price correlate to each other in the higher time frame and the lower time frame. So here you see right now price is back at the middle Bollinger Band. So that's the reason why price is getting stopped here. Here is the point whereby it differentiates from upper trend. It broke the middle Bollinger Band to the lower trend. Right now price is back up to test the middle Bollinger Band after 4 years, 2014, 2018. So it looks like this is going to be a strong rejection level, and if it breaks through, well, crude oil may go back up to the upper trend once again. So let me remove these two lines. The next thing, so you see, that's the reason why price stopped here. So if I'm trading the crude oil in the lower time frame, let's say I enter over here, I'll be looking to note that this is a strong rejection level, and I'll be looking to get out over here, because this is the rejection in the monthly time frame, and the monthly time frame are a strong rejection level. And then next, at the bottom here, we got the monthly, my orange line, which is my 150 moving average. This is what we can see here. Price test, break above with a close. Now it goes back up and tests the line, but it spiked, but it couldn't break and went back up. So it shows that price is respecting this level a lot. And if I was entering over here, my profit target will be here, the monthly 150 line. And if I go on to the weekly time frame, what is interesting to note is that this line, that blue line that I plotted, was the monthly 150 line. It is now in confluence with the weekly white line, which is my 365 moving average. So now we got two lines at this area. How strong is that? That's the reason why price came here, got rejected, bounce up, price in here, got rejected, bounce up. So the reason why price is in this area, because the upper line is the monthly Bollinger Band, the bottom line is the monthly 150, and the weekly 365. And then I go down, so we know that price is kind of in this box, okay? And then I go down to the daily time frame. Let me remove this line so we can see this box. if you see, over here, I have nothing supporting it. I do not know if there's anything supporting the line here. Right? It's an uptrend, but in the middle of the weekly and the monthly is empty. So, is there something that is supporting in the middle? Look at the daily. There may be something over here. There is the daily Bollinger Band. Okay. Let's see the 4 hour. Alright, the 4 hour, we got the Bollinger Band. Okay. But then the 1 hour, take a look here. You see, the 1 hour, price, respects. It's kind of following its way upwards. So the 1 hour middle Bollinger Band is kind of the one that is in the middle of the empty space over here that supports the trend. I zoomed from the daily wasn't anything strong. I went to the, because there wasn't anything strong kind of supporting it. I went to the 4 hour, there wasn't really anything strong kind of supporting this line. But the 1 hour is the one that seems really nice, you see? Kind of very nice. It's in between, right? It's in between the middle Bollinger Band, which means that this is in between the upper trend line, which is the upper trend movement. Okay? Nice. So this is how we interrelate all the time frames from the monthly all the way down to the weekly, daily, 4 hour, 1 hour to kind of know where the trend is and how we can trade in line with it, knowing when should we get out, why did it stop here, what happens in the middle, and so on. So the importance of adding all time frames together is so crucial. And I can zoom it down to the 1 hour, to the 30 minute, to the 15, to the 5, and to the 1, where you can truly see the whole picture and combine them together. When you are able to do that, you will be a master chart reader. That is the goal for every one of us traders out there. And it is highly achievable with practice. Okay? So I hope you like this video. If you like this, do head on to asiaforexmentor.com. That is where I share even more stuff, even more interesting analysis, strategy, system like this. And I look forward to seeing you at my website, where I share my trading journey on how I started this Asia Forex Mentor website in the year 2000. In the year 2008. I've been trading from the year 2000, right? And until this very day, on how trading has evolved, my ups and downs, my wins and my losses, etc. So I look forward to seeing you over there, and I see you on the next video.
So I hope you enjoyed this week's episode. Do leave a comment below and let me know what you think, and it will be really awesome if you hit the thumbs up button. So I release new videos like this every Monday, and if you enjoyed it, do click on the subscribe button so that you will be instantly notified once I release a new episode. See you on the next video.